All right, everyone, welcome back to another Raw episode with Nick V. Today, we're going to be talking about new builds versus established properties as it relates to being a property investor. So if you're an owner-occupier, this video is going to be absolutely useless to you. However, if you are a property investor weighing up the pros and cons of a new build versus buying an established properties, this is 100% the video for you. Before we get into it, none of this is financial advice, all right? I'm just a dude talking into a microphone on the internet. Make sure you get some qualified professional help before you make any financial decisions. For those of you that don't know, I've spent almost 2 decades in property and finance. So everything that we're going to go through is things that I have seen firsthand, that I've experienced firsthand. I've bought brand new off-the-plan properties. I have bought existing properties. And there are pros and cons to both. And I'm just going to call it straight down the line as I sort of see it today. This being a Raw episode, things might get a little bit out of hand, but we can always edit things out as we go. So with that in mind, let's dive. That's the word I was looking for. Let's dive straight into it. Now, the pros, we'll start with new builds, and we'll start with the pros of a brand new property. Now, I guess maybe let's just clarify here what I'm talking about. I'm talking about buying a brand new property off the plan in a brand new area in whatever location. There's loads of them across the country. There's lots of them on the outer rings of some of the major capital cities. There's lots of them starting to pop up in regional centers as well. So that's literally what we're going to be talking about today. If you're building a brand new property in an existing area, some of this stuff won't be really relevant. And let's be real, what property investors building a brand new building in an existing area, it's few and far between. But there are lots of off-the-plan properties out there. And let's get into some of the pros of buying a brand new property. And this is a lot of what you'll see in the developers marketing, etc., is the tax benefits. Now, as it relates to brand new properties, there are some good depreciation benefits that you can potentially claim out of the build itself. Construction costs, fixtures and fittings, etc., that can allow you to claim substantially more in depreciation than if you bought an existing property. That's not to say you don't get tax benefits from existing properties, but the depreciation, obviously, with the new build is there, and it's reasonably significant. Hence why you see a lot of the developer marketing sort of centered around the tax benefits for these new builds. All right. So that's probably major benefit, major pro number one. Probably pro number two is you potentially have lower maintenance costs. Obviously, it being a brand new build, the maintenance things that come up, because there will be stuff that comes up, but a lot of it will be covered by the builder's warranty for a certain period of time, depending on how reputable your builder is. They will fix that at their own cost, depending on what it is. So you don't really have any sort of out-of-pocket maintenance costs, particularly in the early years of owning the property. However, I will argue that considering the quality of builds these days and how quickly and poorly, let's be real, how poorly these properties are built here in Australia, over the long term, I would expect that your maintenance costs may actually swing the other way, and you could be, forking out stuff, after that 7-year period or whatever the warranty period is, to fix certain things. That's just my opinion. But if any of you have ever been inside a brand new build, or let alone lived in one, I've lived in one, the build quality is just rubbish. And again, depending on the builder and, how you, build the property yourself and the things you want to add into it, but they're generally pretty poor. But anyway, we're on the pros, so let's not go into the cons just yet, Nicky boy. Let's talk about pro number 3. There are government incentives, particularly if you're a first-time buyer. You may benefit from grants. You may get stamp duty concessions when you are purchasing a brand new builds or building a brand new property, and that kind of makes it a little bit more affordable in some regard. So those are really the pros that I can see as it relates to being a property investor. Remember, this is a property investing channel. If you're an owner occupier, this is going to be useless to you. Now, let's get into the cons, shall we? Because there are a few, in my opinion. Probably, hang on, there's a heaps here. I had notes, but I do have notes, but this is probably going to go. I need to sneeze all the time. Anyway, I'll try and hold it. Construction delays. Now, it's quite clear, particularly through what we've all just been through in the last sort of 5 years. Things can change. They change quickly. Construction delays are a real thing. Scope creep, or maybe cost creep, is a real thing. So you could be expecting the build to take 9 months. It can sometimes take more. I've had people that have come to us after signing up with a developer to build a brand new build. 4 years later, they still don't have a property. Now, these are sort of the outlier scenarios here, but delays are a real thing. And as a property investor, delays just cost you time. And more importantly, it just costs you money. So, delays in your rental income, delays in you taking ownership of the property, being able to leverage the equity and continue buying and growing your property portfolio. Time is everything in property, and delays are something that you do not want, especially when it's out of your control. So that's a major, major con. It just takes time, and it can take longer than expected, and you as the investor, cop it at the end of the day. Now, as it relates to brand new builds, there in brand new areas, there's really no historical data or information to really go off in terms of the performance of the area. We don't really know the rental, history. We don't know, we can't properly assess the future capital gains potential of the area. And in many cases, many cases, including mine, when I bought my a property off the plan, in that you overpay for these properties based on comparable sales in the area for existing properties, if there are any. Why? Because there's a builder's margin on top of everything, right? You're 20-30% overprice on everything, and you cop it at the end of the day. So the property value at the end of the day is generally going to be 20-30% higher than what the actual market value for the area would be if there are other properties in the area. If there aren't, I've seen it time and time again, particularly in Sydney and some other key markets where it is a completely brand new area. The property prices just stay stagnant, and they stay stagnant for a long time. I'm talking years and years and years. They just basically they stay at the same level because there's just this constant supply being pumped into the area, and that's going to impact your price. And at the end of the day, it impacts your journey as a property investor. Con number 3, cost creep. Now, this would be builder dependent. But for example, you might be looking at a package and talking to, a developer about a build, and you'll see a cost there, the total price or whatever, but you'll notice it actually doesn't come with many inclusions. And what am I talking about? So the base price might not include fly screens. It might not include window furnishings. It might not include landscaping. Hey, if it does and it's an all-inclusive package and you know the final cost, cool, fine. But I know a lot of them don't. So these costs, you might see the base price in the beginning up front when you're talking to the marketing or the salespeople. But as you go through, they're like, oh, actually, no, this is another 50K more if you want all these extra things. So this is something you've got to really clarify before you actually sign anything up front, and just know what's included, what isn't included, and what do you want as the property owner and the investor. What do you want your property to actually look like at the end of the day? And don't skimp on things like window furnishing, fly screens, because you're not living there. There's a tenant going to be living there, and they need fly screens. So be a good landlord and get all the stuff that is just basic things in my mind. So let me give you my opinion on brand new builds and why I personally do not think they are a good investment up front. Now, before I get into that, actually, I will say that what I'm saying doesn't mean to say that every single brand new build is trash, every single brand new area is trash. I've seen firsthand where it can be really beneficial depending on how you time the market and depending on how you assess the wider area on where that property is located. And you're looking at how much supply is going in. You're looking at the quality of homes in the area. You're looking at the demographics of the type of people moving into the area. If you can get a bit of a foresight on what that looks like, it's not all bad. I, as a property professional, someone in the industry buying properties all the time, just think those specific, I guess, Goldilocks zones for brand new builds are few and far between. And you're just far better off buying an existing property, particularly if you want to grow a portfolio and grow it quite quickly. If you're just an investor or a person out there that just wants to buy one property so you can get the tax benefits, hey, a brand new build might be for you, but just know that you're probably not going to be able to scale a portfolio quite quickly off the back of that. But if it's just the one property you want and you're trying to reduce your taxable income somehow, that is a way to do it. That's not tax advice. That's not financial advice, but that's potentially something that you can do. However, if you're an investor that's looking to actually scale, you're looking to replace your income, you're looking to leave your 9-to-5 job behind, you're looking to, create, a more secure financial future, in my opinion, new builds are not the way. And let me give you a bit of inside knowledge here on kind of how the industry works in the background. And there's probably, if any developers see this, I'm going to be on the blacklist. And good, because I don't buy any of your shit anyway. So a lot of you won't know that the new build industry is heavily incentivized. And what do I mean by that? Is that we, as a buyer's agent, get approached by, developers to basically sell their stock that they have. And there's some serious coin on the table. Like, a lot of these developers are paying out $40,000 commissions to buyer's agents like myself to go and buy, to go and send clients their way. Now, this is why I do not do that. If I was a money hungry prick, yeah, sure, I could just be flogging brand new builds and, living the dream. But like I've said in many other potties, I'm not in this to flog some properties and to make a bit of coin out of it. Obviously, yes, this is a business, but at the end of the day, I'm here for long-term relationships. I'm here for you coming back to me in 3, 6, 12 months time and going, fuck yeah, Nick, that worked. Let's go and do it again. And we can't do that with a brand new build, hence why we do not buy them under any circumstance. Even if you came to us and you said, Nick, I know what you said in the potty, but I still want to buy it. I'm going to say, hey man, I don't do it. I just don't do it. It's not something that I can see being a good investment for the people that we work with. So it is heavily commission based, and there's a lot of backhand commissions going around. So I'm just saying this just to be cautious out there. I've had countless, and I seriously mean this, countless investors that come to us saying, hey, we signed up with X company. I won't mention any names here because they'll get me for defamation, but they're you see them all on social media. They're pumping these tax benefits and brand new builds, and we've known all these hotspots and all this sorts of shit. At the end of the day, they take your money, and these investors are now stuck with having no property because it's not built yet. Like I said, it's been a couple of years delayed with some of them. In fact, most of them I talk to, or they've bought them, it's been significantly over market value, so they can't actually pull out any equity and go again. The cash flow is not what they promised in the marketing material. There's just so many downsides to it, right? So if anyone has any guarantees, like rental guarantees, they're flogging the tax benefit stuff, just put your radar up. Doesn't mean to say it's all BS, but just put your radar up, because 9 times out of 10, it's not a good investment. And I know I'm saying I could, and I'm saying that because I could be a BA that just flogs all this brand new shit and make a heap of coin out of it. But the reviews you'd see, and it's just morally, it ain't good. All right. So I don't do it. I don't like it. Like I said, I've done it personally, and I'll just never do it for clients. So those are some, I guess. Whoa, that was a bit hectic. That was the pros and cons of the brand new builds. Hopefully I'm making sense here and not just talking shit. But let's get into the apple of my eye, the rose in my heart, existing properties. Yeah, I'm just kidding. Let's get into existing properties. and the pros and cons of the existing property, because there are cons of existing properties. There's no such thing as having, all pros and it not being, there's not any downsides. There are downsides with existing properties too. Let's talk about the pros. All right. So day one, you have immediate rental income. Okay. The way that we structure our deals is that you as the investor, almost from day one, ideally, depending on the circumstance with the vendor, you have a tenant in there who's paying you rent from day one. All right. You don't have any vacancy period. You're not sitting there waiting for the building to be complete. There's someone in there. They're living in there. They're paying you a rent. Right. That's huge as an investor. Right. You got a massive mortgage on it. You want to make sure you've got someone in there paying the rent as soon as possible. All right. You can do that, obviously, with an existing property because the property is there. Another pro is that there is a proven performance of the area. So we can understand the demographics. We can understand the vacancy rates. We can understand the historic capital growth. We can understand, how the area has looked and felt over a long period of time, because there's just that history there to understand what it's doing. Now, that doesn't mean to say that, history is the only indicator, because it's not, but it just gives us a bit of a view as to, okay, this area was this and it is going there. And we have some data points to go off. Which is critical when you're spending hundreds of thousands of dollars in a lot of circumstance. There are tax benefits as well from existing properties, which I think a lot of people tend to look over, right? Pretty much all, and this is not tax advice, but pretty much all expenses related to your ownership of that investment property are a tax deduction. The interest payments on your loan, it's a tax deduction, right? Any maintenance costs, tax deduction. Right, property manager, tax deduction, council rates, tax deduction. I mean, it goes on, right? So, you get these new builds where like, oh, there's all tax benefits. And it's like, yeah, cool, you do get that with existing properties too. And lots of it. So, if you're worried about maintenance on an existing property, hey, that's a tax deduction. If you have to fork out an out-of-pocket expense, you can reduce your taxable income with it, right? Again, not tax advice. Speak to your accountant about that one. One of the other pros is you've got opportunity to manufacture growth. So what do I mean? In a lot of markets, it's just using new build, right? For example, it's a brand new property and you have to wait for the market to increase in value, right? There's nothing you can do in your power to increase the value of the property, generally speaking, all right? But with an existing property, you've got opportunity to actually fast track that growth. So you can do a light cosmetic reno. You can add a second dwelling, subject to the property being able to take that on, and you can actually increase the value of your property, and that's in your hands. You're not waiting on the market to really do its thing, which is massive as a property investor. All right, we're doing this for a reason. We have a goal in mind. All right, we want to replace our income. We want to leave the jobs we hate. We want to have a secure financial future. We just want to set ourselves up for the retirement. The list goes on, but in my opinion, wouldn't you want to actually take control of that, like full on, and just go, all right, I can actually make this work. You can do a feasibility study beforehand to know, okay, you can spend $1, you make $4 back. All those sorts of things you can do with with an existing property, which are all massive things in my opinion. Now, like I said, it's not all rosy. It's not all great. There are some downsides. Now, you're going to have probably some maintenance things that will come up depending on the age of the property and depending on how well it's been looked after. Right? A building and pest will get done up front, and it might list some things that might not be urgent, might not be critical, but they might be important to do at some point in time, which you're going to have to do. That's just the reality of it. Older properties, it could have an issue with the plumbing, could have an issue with electrical stuff. You might have a dishwasher here or there go. Again, these are all expenses that are a tax deduction. However, these are all things that come up, and they can be an inconvenience. And in my experience, they just generally all come up at the wrong time. I don't know how that works, but it's just the way it goes. So that's a real thing, maintenance and repairs, but just remember it's a tax deduction at the end of the day. Obviously, you have limited depreciation benefits as related or as compared to new builds. They can be there, but sometimes, depending on the age of the property, that just might not be anything to claim from a depreciation point of view. Now, you also, depending on where you buy, you may have, the tenant preferences you might need to consider, right? If you're buying an existing property in a brand new area, you might be sort of shooting yourself in the foot because the tenants might want to prefer the brand new stuff over the existing stuff. So you just kind of know the market that you're getting into, and really just look at, okay, if it's a completely established area, you're not going to have that issue. But if it's not, and there's new stuff going in, you might want to just pay attention to that. Depending on where you are at in your journey. Now, like I said, depending on your investment goals, if you are looking to grow and scale a property portfolio, meaning buy multiple properties in a short period of time, existing is going to serve you better in being able to do that for all the reasons I just mentioned. However, if you're a person who is just looking to, reduce your taxable income somehow, maybe a brand new build might be for you, and you just want the one. You don't want the hassle of any maintenance. You're like, hey, I just want this one thing. I've got to reduce my income. I'm paying too much tax. Go and do that. I'd never recommend doing that. It's crazy to me. It's like, why would you invest money to lose money to potentially save some of it back on tax? You got to really look at the numbers with that. Because in my head that the math doesn't math with that. Like I said, brand new for the people that just want to, one property. I want to say that I got a brand new property. Sorry, you're not an investor. If that's you and you're watching this, you probably hate me now, but that's just the reality of it. If you're a real investor, you're chasing the deal, you're chasing the numbers. What makes sense from a numbers point of view? How can you take control of a situation, manufacture some growth, so that you can go again? That's where the real investors are. You're an active investor from that point of view. You're taking charge of your journey. You're not waiting on the market to do its thing. And you're in as much control as you possibly can be through the journey. Now, like I said, that doesn't mean I'm not shitting on all brand new builds. There's some good ones out there, but they're few and far between, and I ain't seen any in a long, long time. I think the last sort of good batch of new builds I saw in terms of area was probably pre-COVID. We all know what happened with that period of time. Property prices just fucking went nuts. So, I haven't seen any of late. If I do, I'll be sure to let you guys know. But I ain't selling that shit to you. I'll tell you that much. I'll just say, hey, go over here, because I'm not doing it. I'm not having my name attached to that new build stuff. So that's the pros and cons of new versus established. You might be sitting there going, oh, well, you're just biased because, well, how am I biased when I've done both personally? And I just told you, firsthand what the incentives are for me to actually go down the new build path. There's a huge incentive there, like $40,000 to send you to a developer. That's massive, right? But I'm not doing it because it just stinks, and I don't want to have I just don't want problems in my life. You know what I mean? So I don't do it. So that's I think as unbiased as I could probably be, and as that's literally I'm just telling you everything, transparent. If you need help buying an existing property, you want to actually be a real property investor, learn how it works. You want to scale a portfolio. You want to leave, your 9-to-5 job behind. You want to replace your income, whatever. This is what we do. All right. We don't just go out and buy any old property and see you later. Like it's a long-term plan we put together. It's a long-term relationship that we build, and we're the real deal. I've been in property and finance now for almost 20 years. I've built my own portfolio. You've seen me on other podcasts, most likely. Kira's been in construction for 15 years. She's got her own portfolio. Like, we know what we're doing. And if you want to take advantage of our expertise and the team we have behind us, brokers, accountants, etc., reach out to us. You can find us online, smashpropertyinvesting.com.au, on whatever social platform you're on, or give us a call, 0452 046 274. We don't mess about. We're the real deal, the gold standard buyer's agency out there. There's not many that I see as my competitors. They're few and far between. All the rest are peanuts in my mind. No, I'm just kidding. I'm just kidding. All right, let's wrap this up. Thank you so much for watching. Until next time. If you want any topics too that you want me to cover in the raw format where I just kind of ramble on about stuff based on my experience, let me know in the comments. And thanks so much for watching. Until next time, catch you soon.